Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Friday, December 9th, 2022. Thanks for joining me today, and we're going to talk about inflation. Specifically, we're going to talk about firm inflations. We refer to that as the PPI or the Producer Price Index. We actually saw an elevated reading above expectations that kind of made the market react. We had seen a movement down in the 10-year over the last few days. This actually moved in the opposite direction. What was going underneath the numbers is we still saw elevated service inflation. We're seeing that run around 5.5%. The other categories of non-durables were really positive, actually deflation, prices falling there, and durables just a little bit above zero. So service inflation, we've seen that with housing, we see it with medical care, continues to run a little hot. And that's taking away a little bit from the narrative as we look to the important week of next week, where we'll both get an inflation reading and some word from the Federal Reserve. Deeper into the numbers, we did see trade. We've seen the dollar move the opposite way over the last month. We've actually seen emerging markets doing a little better. We've seen precious metals doing better in pricing. Emerging markets are more dependent on those elements. And this is one of the significant moves we have seen in that category over the last several years. It had actually been highly correlated with the developing markets, and even those had been weak. So seeing the international environment improve a little bit, we saw pricing higher from trade. And that not just in the trade category, it sort of seeps into other products that are added to as they create finished goods for the Producer Price Index. Is this meaningful? Probably not. We always see volatility in numbers like this. The PPI really got reconstituted in 2010. Its history is a little fleeting. It actually started from World War I, and it's never been regarded as the most important. We would look at the PCE, which is the Personal Consumption Expenditure Index, or the CPI, as a more of an important gauge on the real inflation that is occurring in the economy. But it is a step back, and it does remind us that the inflationary wave that we saw has crested. It is falling, but it still has a ways to go as we work through the economy. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.